Let me ask you this. Would you rather let your money grow slowly, like it's in financial retirement, or make it hustle for you, earning rent without lifting a finger or chasing late-paying tenants? This is Pag-IBIG MP2 versus REITs, and the right choice could change how your money works for you. Let's say you've got 50,000 pesos sitting in your account. You're torn. Do I save it, invest it, or finally buy that phone that basically seduced me in the mall last weekend? Let's skip the phone. You can scroll TikTok on your current one a little longer. Let's talk about growing that 50K the smart way. Your two options: Pag-IBIG MP2, a voluntary savings program with solid, stable returns, or REITs, which lets you invest in income-generating properties, stock market style. So let's start with MP2. MP2 is Pag-IBIG's upgraded savings program, government-backed, very low risk. Minimum investment, just 500 pesos, but you've got 50K, so you're already playing in the big leagues. The returns, historically around 6 to 8% annually. Pag-IBIG earns from housing loans and government securities, then gives members a cut. It's not guaranteed, but it's been consistently reliable even during tough years like the pandemic. The catch? It's locked in for 5 years. So if your future self suddenly wants that 50K back for a trip to Japan, good luck. You'll have to wait or withdraw early and possibly lose part of the earnings. Now let's talk about REITs. You buy shares on the stock exchange, and you earn dividends usually every 3 months. That's passive income, like rent, but zero maintenance calls or property taxes. Plus, the share price can increase over time, which means capital gains on top of dividends. But yes, REITs are stocks, so they move with the market. They can dip, they can soar. So yes, higher risk, but also higher reward if you stay in for the long haul. So let's bring out the receipts. What if you invested 50,000 pesos in August 2020 and held on until July 2025? To make this fair, we'll compare MP2 with AREIT, since AREIT was the very first REIT launched in the Philippines back in 2020. Let's say you invested 50,000 pesos in August 2020 and held on until July 2025. Here's how your money would have performed. Without reinvesting dividends, MP2 would have earned you a total of 16,650 pesos in dividends. AREIT, on the other hand, would have given you 18,666 pesos and 67 centavos in dividends, plus 25,925 pesos and 93 centavos in capital gains. That's a total of 44,592 pesos and 59 centavos from AREIT, almost triple what you get from MP2. Now, what if you reinvested all dividends along the way? MP2 would have earned you 19,016 pesos and 79 centavos. Not bad, and all steady tax-free growth. But AREIT, with reinvesting dividends and capital appreciation, your 50,000 pesos would have grown by 50,675 pesos and 8 centavos, more than doubling your initial investment. So yes, AREIT outperformed MP2 in both scenarios. Higher dividends, bigger capital gains, faster overall growth. But wait, before you dump your entire savings into REITs. While MP2's returns were stable and steadily rising, AREIT's journey was a roller coaster. It skyrocketed in March 2022, then crashed hard by November that same year, wiping out most of short-term gains. MP2 is like a turtle, slow and steady. AREIT is like a wild horse, fast, exciting, but unpredictable. So here's the bottom line. MP2 grew your 50K into around 66,650 pesos. AREIT turned it into 94,592 pesos and 59 centavos, with dividends reinvested over 100,000 pesos. So yes, AREIT more than doubled your money, but MP2 gave you peace of mind and consistency. Both have their place. The real flex, knowing how to use each one strategically. So let's compare overall. MP2 is stable, tax-free, and easy, but locked in for 5 years. REITs are liquid, pay quarterly, and have serious growth potential, especially when dividends are reinvested. MP2 requires almost zero effort. REITs, on the other hand, you'll need a brokerage account and a little bit of emotional control during red days. So, what would I do with 50,000 pesos today? Split it. 20K into MP2 for stability, your peace of mind fund. 30K into REITs, reinvest dividends, hold long-term, let it grow. That way, you got security and performance, peace and profit. So, what's your move? MP2, REITs, or both? Tell me in the comments. How would you invest that 50K? And if you want me to break down other REITs or build a beginner-friendly portfolio step by step, hit like, subscribe, and I'll drop that in the next video. Let's grow our money together.